I'm back. You're still watching Metropole Television's business. We're still looking at the performance of the insurance industry and forecasting exactly what is going to be its performance in 2021, a time when we're still going through what has been the effects of the coronavirus pandemic on the economy. All right, Adelaide, just before we went on break, the question would be therefore, how do you make sense of this new announcement by the regulator to come in and sort of, well, dictate the prices of premiums within the economy?
Well, I guess the issue of insurance premium undercutting has been going on for decades. I mean, in my 18, 19 years in this industry, the conversations in almost all boardrooms has been insurance undercutting. So I don't think the push to start regulating is really because of COVID. The whole pricing issue has been a big challenge across all through. The regulator's job is not to put a gun on the heads of the insurers.
Yes.
And price, but at the end of the day, they must regulate. They must ensure that the rules of the game are being played fairly across all the different players. So it has to come with a very good balance where the regulator is not stifling innovation, as Gabriel stated very clearly, but at the same time, it's really their primary mandate to protect the policyholders' interests. We're seeing lots and lots of these insurance companies going down because they just cannot meet their capital requirements. They're becoming insolvent, and that is a huge concern to the well-being and the covers that most policyholders have already taken.
Yes.
I mean, we have hundreds, if not thousands, of customers complaining over their policies not being paid, and just because the whole cycle has not been properly thought through. So we do welcome the idea of a consultant coming in to review the pricing more adequately. We must look at how fraud is handled. There's a lot of mismanagement when it comes to the claims process. So it's not just pricing that we have to look at. It has to be reviewed on a 360 perspective.
Yes, Davis, the best way really, I mean, I would ask you this question again. When you're looking at the market in which most of the insurance companies are operating within the country, would you say that there are too many for even the penetration levels in the country? And would you not sit back and say, whoever's going to ride within this wave of the COVID-19 pandemic is whoever we push with forward? Davis, can you confirm whether you can get me, sir? All right, let me cross over to Washington.
I think
Simba, Davis, you can get me. All right, just continue then.
Can hear you. You, Simba. Say, the regulator is more interested in me. The one is insurance penetration. Things that to ensure adequate insurance penetration. As we speak, Simba, our penetration rate in this country is below 3%. Below 3%. So if you calculate below 3% of 47 million, what that tells you is that we have less than how many people who have insurance? Probably less than 5 million. Or I think I have even overstated that. My thinking is insurance is a law of large numbers. If we focus more on the penetration,
yes,
I think we'll not even have a problem with the issue of pricing. We'll have a problem of overwhelming numbers, and we'll have now started to deal with other bigger issues. The number two that the insurance regulator should focus on, and probably also even among us the players, is on what is called capital adequacy, and of course liquidity and all that. If we have penetration, we have our strategy well in terms of penetration and capital adequacy well monitored for these insurance companies, then pricing should be an issue of fixing itself in the market by the players, other than just as Adelaide and Washington are saying, putting a gun on anyone is head and telling them this is the price you must sell your tomatoes, or this is the price you must sell your onions. I think that's not the best way. We need to look at how we first focus on penetration and then on stability for the market. Pricing, let it be managed by the market.
Yes. Washington, talk to me about this. Last year, towards the end, we said, well, smaller insurance companies were going to struggle. And these are the ones that were, in quote, problematic within the economy. They were even struggling to actually get to pay these premiums that we are talking about. Should have the regulator said, this is the best time now for me to go in and give these smaller insurance companies a way out. Tell them, if you can't pay because we can't regulate the pricing, then you should go. Should have the correction started from there, as opposed to saying, well, we are coming in to hold them, let them still be in business, but at the same time, well, determine the pricing of the premiums. Which one should have been the best regulation? Yes, Washington, unmute your mic.
In the insurance industry,
yes.
I think you either swim or sink. There's no why are these companies being prices being fixed so that these companies can stay afloat. If they have issues, if they have management issues, if they have capitalization issues, I think they should just leave. Remember what is happening in the insurance industry right now. There's so many companies right now that are meeting what you call the capital, the minimum capital guidelines that the IRA has set.
Yes.
You know, we are seeing investors coming from afar and getting into the insurance space in Kenya. We have several companies right now that have attracted quite an amount of capital, so they can meet the minimum capital requirements. Now, these small players who cannot meet the same, these small players who are struggling, why are they in the field in the first place? Right now, as we speak, we have several insurance companies that are not even paying claims. Right now, and the doors are open, and people are buying insurance from them. That's a thing where we need to start from, Simba. I think we are running away from our problems.
Yes.
We should not be talking about fixing prices. We should be talking about shutting down companies. We should be talking about taking care of our clients in the field. Right now as we speak, just the other day, Policyholders Compensation Fund has for the first time compensated players, compensated clients, ever since these insurance companies have been shut down. Since
we seem to have lost Washington at that point when he was trying to make really an important point. Well, we still have him around. Let me cross over to Anthony this morning. Yes, Washington, can you get me now?
Yeah, I can hear you.
Oh, continue with your point, sir.
Yeah, I know where the problem came in. Now, all I'm saying is this, Simba, that we need to see these companies shut down.
Yes.
See these companies, I mean, it's also unfair to the insuring public, and it's very, very, and I always talk to the insurance agents that I'm in charge of. Why do these companies that actually don't pay claims? Why do you take your clients there? It doesn't make any sense. What the insurance, the question will be asked you right now, the regulator, and I wish the regulator was here, was this. What are they doing about these companies that are not paying claims?
Yes.
What are they doing about these companies that, and as we speak right now, the doors are open, and they're taking in premiums. Taking in premium means that they're taking in new customers for the same. Yet knowing these customers will never be compensated for anything. That's a question we should be looking at, not about fixing prices. You know, this industry, we need to be careful because we are killing the insurance industry in this country.
Yes. Anthony, let me bring you in on that as well. You can hear exactly what Washington is saying, but what Washington is saying, well, if they can't pay, then, well, let them get out. That's the best way for you to correct the industry. Do you share the same sentiment? And out of these 20 of the 56 that are in business in the country that are already struggling actually to pay these claims, is it the best time for the regulator to tell them, well, you gotta go?
Okay. I think, of course, Washington's recommendations is quite radical. It's quite
Yes.
radical. But I think first of all, I'll start. Yeah. Uh, I think I will first of all start by asking the regulator to find out exactly what the issue. Um, the challenge we are facing as a country is not addressing some of the concerns. For instance, something like fraud is something that is so huge in the insurance industry, extremely
Anthony,
huge.
and I'm sorry to cut you short. I don't mean to.
Unless and until we are able to know how to deal with it,
Yes, Anthony, can you get me?
yes,
Is the issue, Anthony,
I
from
can
what you
hear
stated
you.
this morning, not well known? But if we're talking about a penetration that is just sunk to 2.34%, then is actually not paying claims one of the reasons as to why we're not seeing this penetration actually go to the level we need it to be, double figures within the economy?
Yes, of course, I think at the end of the day, shutting will be the final way, but I'm saying should not be the first one to start with.
Yes.
That's what I'm saying. It may actually be, it may be as necessary at some point in time. It's like a home. Just look at divorce. When you first of all have a conflict at home, the first thing that you think about is not divorce. You first of all looking at going to old men in the locality and knowing where exactly the problem is.
Yes.
So for me, I so one of the key issues that we must be able to ask ourselves are fraud and even corruption in our industry. Because right now, look at the number of insurance companies. The acquisition cost of their businesses is very, very, very high. And these are some of the small things that actually are causing a lot of problems.
Yes.
The disruption of the traditional network. I know we are in the digital era, and I shouldn't necessarily be talking about just physical presence of brokers and agents. But the fact that they have been disrupted in a manner without necessarily bringing in another distribution channel, that also is causing a lot of a lot of casualties in terms of production. For instance, I'll give you an example. We came with the policy decision perhaps to agree to go to the bank assurance way. Now, banks have not helped in terms of penetrating penetration in this country. Essentially, what they are doing is cannibalizing what we insure. Because you wait until somebody goes there with a car insurance or property insurance, and the business that would have come to me or any other person for that matter is just converted into business by the bank, and we are growing. So there are some critical policy decisions that actually have been made that have completely messed up the way insurance runs in this country.
Yes.
So I think the issue is the issue of non-payment by the insurance company. Of course, there is an issue of management, there is an issue of fraud, and the policy decisions that sometimes have been taken by government. We really need to think through about it. But I agree, at the head of it all, if some insurance companies are unable to do, perhaps even before talking about shutting them, I would also encourage them perhaps to think through on issues of mergers and acquisition by those who are able to. Because if you now shut them today, what happens to all the liabilities that have accrued? I mean, some of the companies actually cases take wrong, especially those people who are in the PSV sector. So we need to think through what to do, because if you shut them today, you leave them with you leave their clients with liabilities that are not going to be satisfied. So that I'm saying, let the issue of shutting them, like Washington radically suggest, towards the edge, but at least let's first of all try and see how can we be able to help them. But if the issue of management is critical, the issue of fraud is critical, and the issue of helping the traditional people like us who have been selling these products, we need to be perhaps rewarded, not to be fought. And what do I say by this? I'm not saying that we be allowed to continue the way we are doing, because just selling shops, whatever. We need perhaps also to start thinking. That's what I'm talking to my member like currently. We must be starting thinking of how we're also going to be going to the digital world. It's not doing away completely. It's changing the way we do business. Because when you come and remove brokers and agents and you assume that those digital has come, the challenge now with digital platform is that if somebody comes and buys a motor policy, sometimes the digital platform does not ask him whether he needs a medical cover or and that is the role of somebody who was selling insurance. You come and we will actually cross-sell, and we used to get a lot of business from that area. So in a nutshell, I would say there is
Yes.
a problem in the way we are managing, particularly on our side, and that needs to be fixed. I think all of it is not regulatory. Some of them may be also self-regulating. We perhaps AIBK, AKI, and insurance agents, we must also have the teeth. We must be recognized as raw so that we can be able to punish and also regulate our own members. Otherwise, not everything can be done at the legal level.
Pretty much, Gabriel. Now let's talk about that and clear that conversation. Now, IRA is giving us those numbers that 20 out of the 56 were actually quite struggling in 2020. We see exactly what is happening in the banking industry. They're using that as an opportunity to reduce the number of operators within that specific industry. Gabriel, could have been this the magic bullet to address the issue of over-insured economy, just like we're trying to address the issue of an overbanked economy? Because it's got to start from somewhere.
I'm not sure we are over-insured.
Going by penetration, Gabriel, you will say
Yeah.
that, isn't it?
Yeah, but, so, we need to understand why we have these small insurance companies. Where do they even come from? One, could be the reason you could have such a small insurance company operating in Kenya could be that they have business in Tanzania and they just try to serve their few customers in
Yes.
the Kenyan market.
Yes.
So they do not see the need to have a very big asset base for their Kenyan business arm. But yeah, then they need to serve their customer here. Two could be an insurance broker who actually grew to a certain size and decided to become an insurance company. So you see, we cannot then, that's progressive from any side. It's very progressive because then you're operating on both levels. But then when you tell them to shut down or to be merged with others, it becomes a very difficult conversation. I think we have a lot of room for growth and innovation in the insurance space.
Yes.
If you look at, not even forget even the products in terms of, when I sit and I'm looking at a health insurance cover, for example, there are very small things that make a difference. It could be the waiting period. It could be you've missed out one hospital in the cover. So there are very small things that can differentiate a player from another.
Yes.
So I think smaller players and the baseline is what Washington said, that they must be able to pay claims. That has to be done without saying it. That has to be there. But if any of them, those who can meet claims over and above that, they need to be supported. We need to think about, whether it's accounting policies or how we calculate their capital, and that will help them at least survive as long as they're able to meet their claims. Because the minute you're not able to pay your claims, then, it's a very different matter. But, give them room for product differentiation. Because think about it, if I'm a small insurer, I just need to acquire quite a number of brokers, and they channel their premiums my way, and I might actually grow my customer base pretty fast. If I can
Yes.
come to a better arrangement, because there are commissions for the brokers, that's a driving factor. A broker is just looking at commissions. So if you're able to pay my commissions faster, or you're offering better commissions, then I'll probably recommend customers to you, because there's no big difference in the product as long as you can pay claims, as I said. Now, once that is met, we should just let them grow, because like we keep saying, the penetration is still low, but how many of us would actually be able to even pay the kind of insurance products we have, pay for the products we have without our employers financing them? Most people are actually paid for their products by employers other than your car. When you think about it, your health, even pension, life insurance, the most lucrative products are actually paid for by companies. So again, you can see when we talk about penetration, it's something we also need to think about. We need an entirely different product category.
Yes.
That sort of serves self-employed or people who are not, in lucrative employment. that's, you know, and there's an entire market that can be served by that. So I think the insurance sector and like the banking sector can be served by having very many players in that space. Of course, capital adequacy is key. And more importantly, you know, being able to pay claims and let them compete. I think personally, you know, for insurance, brands don't really carry the day. It's really recommendations and word of mouth. Did your pay get claimed? Do your claim get paid? Yes. Did your claim get paid? Yes. And if there's a problem, you know, you can go to the IRA. So that really gives the policyholders a lot of comfort. So I think let's keep the many players. Let's find a way to, you know, help them meet their milestones. Give each player different timelines to which they're required to meet these timelines. And it's been done even in banking.
Yes.
So it can be done in the insurance sector as well.
Pretty much. Adelaide, if you can afford us 2 minutes, because I would like us to take a tiny little break before we come back. Let's look at some of the numbers that we have from the long-term insurance sector that give 82,846 claims that were settled in the period under review. We're talking about all the way to December 2020, and the number of outstanding claims stood at 29,965, which represents a 73.2% payout. Do we expect for the same trend to continue in 2021?
It's still very early to tell. As I said, insurance penetration, insurance uptake did not improve. It did not improve. For anything, it declined.
Yes.
We are lucky that the decline, not lucky, but we do know that there's generally going to be a huge decline in insurance uptake in general. But we are also very lucky, rather, as a country, that the pandemic did not affect, we did not see huge amounts of deaths. We didn't see huge amounts of impact in regards to mortality due to the pandemic, which would have been a grave concern, really, if you look at what really happened in the West. But for those who are covering in the long-term business, those who did have a bit of retrenchments and redundancy kind of pegged riders to their products, then we anticipate to see a slight push up in regards to claims. And we expect to see some kinds of behavior. So the behavior might not be outright payout of claims, but we expect to see that people might want to borrow a little bit of credit from their policies, because most of these long-term products cater for facilities for people to take up loans. I know that the economies, people's incomes have been suppressed due to pandemics, loss of jobs, etc., uncertainties. We expect to see that quite a lot of withdrawals from pension schemes, especially the percentages that are directly attached to the employees.
Yes.
So those are the kind of behavioral changes we anticipate, but we don't, from the perspective, we don't expect to see an avalanche of life payouts caused by death. But again, you know that penetration, especially on the long-term business, has been very low. We have not seen a spike of uptake because of the pandemic. So there's definitely going to be a decline, in my opinion, but it's going to be, we're going to have to really review the data as we compare with the impact of COVID. But a lot of behavioral issues more than huge significant issues on claims payout.
Pretty much. Now, just before we take that break, even as insurance companies continue to come to terms with the devastating effects of the coronavirus pandemic on the economy, they still have impending regulation in the form of IFRS 17, which will come into effect on the 1st of January 2023. Now, the new standard will impact many departments and functions across organizations, including product design, pricing, actuary, and finance. It will also change the understanding of how to comply and choose the design of systems and processes. It is still seen as one that will present hurdles during the implementation of phase, with significant practical changes around data, systems, and processes to be expected. Once we come back, what is this IFRS 17, and are local insurance companies, and I'm talking about the smaller ones that are getting affected on capital adequacy, that are forcing the regulator to even change the way in which we price premiums in the country, ready for this shift. If not, what do we expect to see in 2023 or leading to 2023 once we come back here on Business AM? Remember, you can participate 20146, your SMS line, at Metropole TVKE across all the social media platforms. We got some of those. I've been compiling them. We shall be putting those questions across to our panel this morning here on a Business AM once we come back.